not too much power underneath Kamala's hood. Borders are, it's what you are. Borders are, borders are. Cackling Kamala, you're dumb. Mass inflation imminent if she weasels herself in. If that don't sound like fun to you, then you better help me win. I promise I'll secure you, you'll be in better hands. It'd be a flippin' free-for-all with what Kamala plans. Borders are, it's what you are. Borders are, borders are. Laugh it up, Kamala. This lady, she's cackling crazy. From the wackos on the left to the...
Okay, folks, welcome to a very late Sunday Night Futures Live. I didn't know that I was going to do this tonight, but my wife was good enough to let me off the hook a little bit. This is my 30th wedding anniversary, and we were supposed to have our dinner last night. Actually, 2 weeks ago up in Salem. Of course, we had to get a little bit closer last night on Saturday. But unfortunately, her sister became very, very ill. And then almost at the same time, her aunt, very close aunt, became very, very ill at the same time. So we pushed last night into today, and we went out to dinner tonight. It was a great night. The restaurant was empty, and they couldn't throw enough, because we go there all the time, drinks and whatever. So believe me, I'm tuned up right now. If you take any financial advice from me right now, you're nuts. Okay, send this to your lawyer. Please do not take financial advice from me right here, right now. I had some really great Crown Royal Manhattan straight ups. Those were good. And a Sambuca rocks, a couple of coffee beans. And now I'm just sipping on some aperitivo, Aperol Spritz, just to chill out. So I wanted to do this because I don't think I've missed a Sunday Night Futures Live, and I don't know how long. Sometimes on Thursday nights I'll push, but usually not on a Sunday night, because a lot of things happen over the weekends, and especially in this market environment, we want to pay attention to the markets as much as possible. So I'm going to spend a few minutes here. I'm not going to go the full hour as I normally do, but I did want to go live and just check out the markets. I haven't looked at them yet. I know they're up. I did look at them a little bit. I know they're up. Nat gas down, which we're long of. So let's get to it. So let's talk about first. Let's go to comments, say hello, make sure my audio is working. Hey, Sam. I'm always fired up about the futures. Yes, you're exactly right. No doubt about it. Nikkei taking a nosedive. That leads me to believe that the yen is probably up. Dow over 4% now. Elaborate on that. It's not. It hasn't moved 4% overnight. No, I got to take a look now. Let's take a look. Let's go to the futures action. All right, so we'll kick it off with Natty Gas. Is in front of us. We're long of Nat Gas. I was bullish on it going into last week, and I remain bullish on it. So going to the new trading week, I remain bullish. It's very, very volatile. Down 0.83%. Not a big deal. Natural gas is so volatile. They call it the widowmaker of commodities for a reason. So we don't react to small movements in natural gas. Let's go to the E-minis. It's quiet. We're up. I mean, it was a good night to take off. Let's bring up, you mentioned Dow. Let's bring up the YM. These are the futures. They're up. There's some upside, but deflation will affect natural gas eventually. I disagree with that. No, no. Natural gas has been through a bear market through deflation and inflation. It's a matter of supply and demand with natural gas. So, no, I think that you may want to look at natural gas through a different lens. So, in the end, what will be the the energy choices of the future? It's going to be natural gas. It's going to be nuclear. Solar is going to have a place, but it's not there yet. Wind, I don't think wind is an option. It's killing wildlife. Uh, so I think it's going to be natural gas. It's going to be solar to a certain extent, but I kind of disagree with that. Take a look at a chart going back 5 years, and through deflation and inflation, natural gas has gone one place down. Supply and demand. Supply and demand. Let's go to. I haven't looked at the NQ yet. Check out the NQ. NQ is weak. You may see that it's up, but the however is that you want to focus in on. This is a 5-minute chart. Let's go 15-minute view. What's happening here is that you're seeing a struggle between bulls and bears. And by and large, and again, this is only on an intraday basis, that the NASDAQ is in an intraday downtrend. If you're a day trader, this matters. If you're a swing trader or an investor, it doesn't matter. And we've broken support. We did so back on, I believe it's Friday. Yeah, Friday. And we're trying to hammer back now. We'll see what happens here. Do we break to lower lows? Do we manage to break out? And October is not one of the better months out of the year. But the same could have been said for September, which is even a worse month for equities. And it was a good month. So we don't want to hang our hats on seasonality here at all. Let's check in with the dollar. The dollar's up. It doesn't appear up. I think this is wrong. So what they're calculating in here is dollars current price action relative to the close in the after hours session on Friday. We don't go by that. Right now, relative to Friday's close, it could be up slightly. It is up slightly. Let's check in with gold. Up over 0.5% on the session. This is a 1-hour chart of gold. It's funny, in the after hours session on Friday and into this evening, gold has been able on a 1-hour time frame to recapture its 21 period EMA here in dashed line. So pretty bullish stuff. Silver. Now, to me, I'm more bullish on silver than I am on gold at current. Because if you were joining us on on Thursday Night Futures Live, we were talking about the upper band of resistance on gold, and we were right into it. So right now, gold is looking very, very bullish if in fact it closes above that upper band, but silver is nowhere near it. Silver has a lot more way to go relative to gold. So I prefer the silver trade versus gold right now. And we're long of both, but I would rather add to the silver trade than to gold. Now, on a 4-hour view, you're seeing a little bit of selling on these rallies, like a stair step down. So we don't want to go buying silver until such time as we begin to break out and above resistance levels here. I want to know when we start taking out higher highs on silver. And then I'm going to get excited. Right now, I'm just going to watch. There's no reason to go buying silver right now. It looks good, but we don't want to go buying it yet. Let's check out oil. Oh, for a brief moment, I was there's a restaurant in my town in Huntington, New York called Cassis, a French restaurant. And I got to tell you, great food. I don't get any promotion out of this whatsoever. And I was up in Marblehead, Massachusetts, only about 2 weeks ago, and I wanted steak frites, and it's called Five Corners Kitchen up in Marblehead. Great place, delicious food, awesome place. They ran out of steak frites, and so going out tonight, I'm saying to myself, "Self, you're gonna have steak frites tonight." And the waiter who we usually get there is a really great guy, and you want to hear the specials? I said, sure, all right, I'll hear the specials. It was Chilean sea bass with a big fat piece of crab cake, but they don't just put breadcrumbs into the crab cake. It's crab. It's crab. It's delicious. And it had a lobster sauce on top of the Chilean sea bass. And so my wife, with her infinite wisdom, says you can always come back and get the steak frites. And so I went with this Chilean sea bass. Awesome, delicious. I digress. So let's go to oil. Up about a third of a percentage point at current. Not much to talk about. Oil's in a downtrend. It's probably going to go lower, but at some point in time, it's going to catch fire. We're not there yet. What else do we need to go over? Let's go over livestock. Considering the fact that I want to eat some steak frites in the coming weeks, I want to check in with live cattle. Live cattle is right back up at historical resistance. Do we have a scalp to the short side? I would not fall in love with the short side here at all. This is a healthy chart. Let's go weekly view for a moment. This is getting ready to break out. I would not fall in love with the short side here. By and large, it appears as though the path of least resistance is to the upside. We had broken support back here in mid-August, but that is now in the rearview mirror. We recaptured support And now we're flirting with a breakout. So I would not short this, especially if there is a potential Harris administration. What else do we want to take a look at? Let's go with agriculture. Oh, you know what? Home heating oil. I just got my refill the other day. I want to see if I did right. I did do right. I'm up. I did a little bit of an arbitrage on my home heating oil from my home. And we're doing okay right now. Good. Good to see. What else? We didn't go over yen, euro. Before we go to agriculture, let's spend a couple of minutes on yen, euro. Very, very important. Forget about the euro dollar. Euro first. Euro up relative to, wow. This is a weekly chart. And the euro is looking very, very favorable at current to a continuation move up higher. We had broken out back here the week of the 12th of August, retest, follow through. So the path of least resistance at current with euro is to the upside. Now, why does this matter? If you're bullish on commodities, then you need to be watching the US dollar. If you are not watching the US dollar and you're bullish on commodities, you're not playing the game right. You need to understand, is the dollar going up or down? Because most commodities have an inverse correlation. Natural gas, not so much so. Gold, a very high correlation. So what we want to do here is say, okay, the path of least resistance right now for the euro is to the upside. We know, because we're intelligent individuals, that the euro makes up 55% of the Dixie basket. Therefore, as goes euro, in all probability goes the US dollar, however, in the opposite direction. Now, the other currency we want to pay attention to is the Japanese yen. If you have euro moving up and the Japanese yen moving up, which flashed a bullish key reversal last week, then the dollar is going to have a very hard time. Right now, the yen is down at current. I do not think this holds. I think the yen is going up higher. Why? The reason is that they're raising rates. We're cutting rates, and we have 30 billion, however you want to measure, 30 billion, 30 trillion dollars worth of debt. We are in so much trouble. It's ridiculous. Even Elon Musk is talking about it now, that we are in a lot of trouble. So I think the path of least resistance is to the upside for the Japanese yen, to the euro, and to the dollar. I don't like to say it. I'm an American. I love my country, but I'm also a realist. There is still a little upside left in natural gas, but I think there's a lot more upside to natural gas. I mean, if you take a look, let's take a moment here and take a look at natty gas. Let's take a look at it. I'm going to bring up Boyle for a moment. Perhaps, let me go with UNG, because that's a non-leveraged product. We went long of Boyle last week. Now you can see what we're doing here. We have a beautiful W formation, and we're moving up higher on a daily chart. The however is that when you take a look at a weekly chart, this is just beginning. This is like, we haven't broken. So I'm going to concede a point to you right now that if your argument is that, you know what, Bob, we're in a long-term downtrend on natural gas, I will not argue that with you. You're right. The however is that if we break out and above 2156 on UNG, that means we had what you call an undercut double bottom, and that will be a breakout above major resistance, and we will be going up a lot higher. Now, I did a video, I believe it was last weekend, about natural gas. It's titled "Why Natural Gas is the New Gold." The reason is for many, many reasons. You've had contango on natural gas for quite a while now. That's coming unwound. You've had builds in natural gas, inventories build. They're still building. There's still a little bit oversupply there. I won't deny that. However, not as bad as it was. Now, the other thing that's coming online is the data storage demand. AI is going to be accumulating a lot of energy usage. So it's going to be natural gas. It's not going to be solar. It's not going to be wind. It's going to be natural gas and nuclear. They don't want coal. They don't want oil. They will settle on natural gas and nuclear. That's where they can find a common ground. So I think what we're doing right now is that we're fighting over nickels and dimes. I think that we've hit a major bottom on natty gas, and that in all probability, and to identify that natural bottom, let's go to a quarterly chart, because remember, we only have 1 day left in the quarter, and let's take a look at it. Let's be curious, right? Maybe I'm wrong. Look at this flat line on Stokes, but we've been there before, to be fair. Look at this bullish reversal bar. Let's play a game. Let's play a game. This is what technical analysis is all about. Rule number 1, have we stopped going down? The answer to that is quite probable. Yeah, let's get rid of that. I did that horribly. Quite probably, the answer is yes. Here. So we've had quarter. Remember, this is almost a year now. This is 3/4 of a year. We're not talking about a daily chart, a 15-minute chart, a 10-minute chart. This is a serious chart. This is a quarterly chart. What have we stopped doing? We've stopped going down. We've been here before. To be fair, we do not want to put blinders on and pretend we have not been here before. We have been. Back here, we did the same exact thing, and we broke down further. So what are the probabilities? I think the probabilities favor bulls here on natural gas. I think that all probability, this time next year, you're going to be paying a lot more. I hope you don't. I hope you don't. I hope I book my profits on my long trade and I'm out. And I hope you're paying less. But in all probability, you're going to be paying more next year for natural gas. Let's save this. All right, what else do we have to talk about here? Let's see what economic data is coming up this week. Tomorrow, not much. You got Jay Powell coming out at 1:55. I don't know what else he's going to say, but all right. Tuesday, PMI. It's been negative. It's probably going to stay negative. More Fed heads. A lot of Fed heads coming out this past couple of weeks. So this is the jobs week, folks. And so, by and large, the markets have done not much. They've creeped up, they pulled back, they've creeped up, but net, a bias long market. What if ADP, or on Friday, as I like to call it, the Pimp Mac Daddy of them all, non-farm payrolls in terms of economic reports, come out blisteringly weak? That's a problem, because the equity markets don't mind bad economic data because bad news is good news for the stock market. The problem is that when you have jobs getting hit, spending gets hurt. Uh, remember, this is a consumer-based economy, and if the consumer is dead, as I believe that they are, credit card delinquencies rising, automotive delinquencies rising. It's undeniable. Even though they spent a lot of money last week on one of the reports that came out, uh, you have to wonder at what point are they tapped out? And usually, when the consumer is tapped out and you get jobless claims rising as they have been, that usually means that we're heading into a recession. So, what's validating that thesis or that hypothesis? The hypothesis is being validated by one chart. You know what I'm going to say? Yield curve. Yield curve. The yield curve, we have one trading day left to go in the quarter. This is a monthly chart. And this candlestick is ripping through and poised to close above. One trading day left to go. A lot can happen. Maybe it closes back down at the lows of the quarter or the month. I don't know. However, it is not looking good. And when this yield curve gets going in the wrong direction, it is not good for equities. And remember, equities are priced for perfection. Nearly a 37 handle on the Shiller PE ratio, strongly overvalued on the Buffett indicator. Hell, let's take a look at, finally, they're starting to talk about it on Twitter. Bulls versus Bears index. I mean, the frothiness of Bulls versus Bears, or I'm sorry, bullish percent index. My apologies. We're getting to be bananas at this point. We're getting overbought. And add to that, when you take a look at the VIX, when you take a look at the VIX, where the hell is it? What did it do last week? Bullish key reversal. So, you know, I look at the chart of the S&P 500 on a weekly time frame, and I say, you know what? This can go higher, and even more so on a monthly time frame. This can go higher. This can definitely go higher. I am not saying sell all your stocks by any stretch of the imagination. I'm still long of a number of stocks. However, I have shorts in place as a hedge. But with the sentiment indicators, whether you use the put call ratio, whether you use the bullish percent index, whether you use the VIX, they're all telling you, whether it be the yield curve, steepening, they're all screaming, there's something coming down the road. If you ignore it, it's on you. It's on you. So I'm not saying dump your longs. I'm just saying be prepared to sell and start building short positions, because that's what we're doing here at the Contrarian Trader. And if you're not currently a member, you don't need to be. There's a link below, I believe. As a matter of fact, I don't think there is, because I did this impromptu. We have a feed where you can join up. I can't see. Why can't my link get over there? I'm going to put a link in the, there we go. I'm going to put a link in the chat box there. Sign up. It's free. Some of my favorite people in the world are in that forum. Great people. You get to know them as individuals, not just as traders. And I love them and hope to see you on the side. Everybody have a profitable trading week and an awesome night. Thank you to my wife for letting me do this tonight. And I'm probably going to be in trouble for going too long. But